Hi everyone, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So as you all know, today is Thursday, so we are expecting quite a lot to happen in the markets with the most recent news coming from Germany, that is the German CPI, which came in hotter than expected with a month-to-month growth of 1.0% compared to previous contraction of negative 0.8%. So as you can see, show you a brief highlight of the same. Yes, Germany harmonized consumer prices index is basically reading 9.2% compared to a previous reading of 9.6% and a forecast of 10%. However, if you look at the annual CPI, then it's clear that things are getting worse in Germany, with inflation now rising to 8.7% compared to the previous reading of 8.6%. So this is quite worrying in the market. If you see the inflation beginning to spike again, then you might see or expect the ECB to start hiking interest rates. So that's one of the major news that we'll be focusing on today. Further developments along the same. However, overall, if the entire Eurozone CPI basically indicates high inflation, then we expect the ECB to become more aggressive in hiking interest rates, and these would be positive for the euro. So we might be seeing some further activity happening in USD among other pairs. So as you can see, Euro New Zealand is currently on a very strong losing streak against the New Zealand dollar, basically showing proof that the New Zealand dollar as well as the Australian dollar have been quite resilient. So clearly, you can see the sharp pullback that was happening in AUD/USD yesterday, and now a very strong resurgence, making almost 100% recovery from yesterday's evening. So there is a good chance that we will be seeing some further upside happening here. And if you look closely on the forward chart, it seems like there was a retest of this particular area, and now the market is attempting to push up higher. So on the stock market, there's one very important news that happened over the night. So yesterday, Google was trying to showcase its newest chatbot AI product, that is Bard, but then it had some challenges, and these led to a big sell. So Alphabet shares dive after Google AI chatbot Bard flaps answer in ad. So what basically the chatbot did, basically corrected an ad and used that as an answer, and that was taken as very bad for the bot. So the lack of accuracy, lack of ability to display correct information on search is being taken as an inferior product. So the uptake of the bad product might be a little bit slow compared to what we are seeing happening in ChatGPT. So this week has been all over the news about AI wars. So the arms race is on. A lot of companies are working to make sure that their AI is the dominant one in the market. So in China, Baidu has their own AI that they are looking to replicate what ChatGPT is doing. So for Microsoft, it basically invested under a month ago somewhere around $10 billion in ChatGPT, and so far the product is gaining point potential. So on the first month of its operation in December, it had 50 million monthly active subscribers, and now in January, we're expecting that it already exceeded 100 million monthly active subscribers. So this is one of the fastest growth that we have seen in a mobile application or in an internet application, and this is running faster than TikTok. So TikTok roughly took about 9 months to get to 100 million monthly active users. But then when you see ChatGPT reaching 100 million users within 2 months, then that's a record on its own, and we are expecting some further growth in this. So as this happens, investors are also placing their bets in some of these companies. So remember, AI products did not just enter the market, it's only that ChatGPT hit the market with a very strong hit. So while there are other companies that are spreading the market, like Palantir, in this case, the biggest war is between Microsoft to try to get search, especially in the start. So far, it seems like Microsoft is winning. So if you look at the stocks and how they performed, Google was down 7.68%. And if you look at Microsoft, just a quick search here. It was down, slightly down at 0.31%, but clearly you can see the big sell-off that happened in Google, down 7.68%. So from the chart, you can already see the same information. So I'll try and show you the same chart here. So unless Alphabet has a very strong answer explaining why they have an inferior product that they want to launch in the market without any form of accuracy, then this wipe off was quite significant, create panic, and there's a good chance we'll be seeing some further downside happening in the market later at the market. So as the market opens, we will be expecting to see some further downside. You can already see that Google opened the year on a very strong note and has been moving up quite impressively, just like other tech stocks. But now with this news, we might be seeing a reversal of the overall trend and start seeing Alphabet shares continue trading further downwards. So this is a key thing to consider, especially during the New York Open, once the stock market opens. So besides that, one of the key trades that we've been following have been in Brent oil. Brent oil has been going quite well, having bottomed around the price level of $79 per barrel. So I made quite an impressive run here. This was on Monday. Tuesday continued, Wednesday, and today being Thursday. You can already see that the market is attempting to reverse the entire move that happened on last week. So last week, we saw the market drop sharply for 5 straight days. So this sharp drop was roughly 7.5%. If you look at this is sorry. I think it doesn't start there. So for 5 days, this is the performance. So around 7.83%. And now this week, you can already see some V-shaped recovery trying to basically turn over all the losses that it had lost last week. So Brent oil is quite promising today. We see full recovery from what happened last week. And also, as we mentioned yesterday, there's a lot of fundamentals that are supporting this recovery. Because for gold, we are seeing same scenario happening as what we were projecting yesterday. We had an inverted here gold indicating a lot of momentum and then some sideways momentum. So yes, yesterday we saw a very strong green candlestick here, indicating a break towards the upper side, but immediately the market pulled back down, and now it seems like we have an extended flag that the flag continues to trend sideways. So what we do, we adjust our lines and still continue monitoring the chart to look for a potential breakout out of this consolidation. So currently, you can already see the swings are quite predictable, but you don't want to be participating in between here. You want to get the next leg, something similar to this. So the only way you get this is after the market breaks either the upper or the lower trend line. So it's a matter of wait and see, be patient, keep monitoring the market, and identify when the breakout actually happens. So as for equities, you can already see there's a very strong demand. So every time the SP 500 attempts to go back down, it doesn't even get to the lower trend line before the buyers come in and change the trend. So we saw this happening yesterday. This was the market going for the down. Once it got to these price levels, buyers came in, and you can see this morning there's an attempt, the continuation growth of the SP 500. So the day after yesterday, we are talking about Tuesday. Also something similar. Market went pulled back, go to the support level. Then we had the speech. Remember, this volatility here represented the period when Jerome Powell was issuing a speech on monetary policy. And in this case, there was a lot of activity here. But then eventually the market closed towards the end of towards the high of the day. So yesterday it was an attempt to pull back, and now seems like a continuation. So there is a good chance we'll see the US equities continue to rise today. So SP 500 already showing signs. If you look at the Dow Jones, same case, you can already see an attempt to pull back. Today we are already rising, attempting to break yesterday's high. So remember, the more resistance has been tested, the higher the chances to be broken. So notice how the market has been testing these areas a couple of times. Every time failing to break, and now the market is going back to test the area again. So there is a good chance that this time round there will be a break and a see some continuation upwards. So remember what we discussed yesterday. So after the market forming this long-term triangle, already see this forward chart. So you should highlight this forward chart. You can see the swings up, down, up, down. Then a break here. You can see the green strong candlestick happening here. Then the natural expectation is the market retests the breakout area and then continues in the direction of the break. So what we saw here is the market breaking out here during the speech yesterday, pulling back to test the area, attempting to pump a couple of pullbacks here, or eventually pumping. So the idea is to watch the price level around 34,174. And if the price breaks this area, then we for a continuation of the break and go for a long position. So as we all know, we always know, this is not financial advice. This is purely educational to help you understand some of these key concepts and identify some of these key price levels. So that's it for today. I'll be checking if you have any questions, and if there's no question, then we end the session there. So, that's good. I'm on live account. Thank you and welcome. People, don't be overly aggressive. AI will be interesting to follow. ChatGPT can enjoy the current fast mover advantage, while others will be compared to it as the average user doesn't filter through answers. So NASDAQ UT 100, the last day. So let's check on that. So for majority of the stocks that made massive losses last year, they are making a very strong growth this year. So that explains why there's quite a resilient growth in the NASDAQ, since most of these stocks were considered to be very cheap earlier this year. So what we are seeing here on the daily chart, it's a very strong month of January, and now until February, an attempt to go higher, but you can already see some form of weaknesses happening. The market is not going at the same pace it was doing the month of January. So if you want to do some form of trend line, most probably follow along this path here. Let's say this goes here for a trend line. Then we do a smaller time frame, the 1 hour chart. So this was a hyper aggressive growth, breaking above the upper trend line. Then the market pulling back down. But now what we have right now seems like some form of consolidation. Doesn't seem like the market is forming the same particular pattern it was forming some time back. So from these, you can easily tell that the market is just about consolidating, and that's all for the NASDAQ. So yes, there's some good growth that has been happening this year, but now we are faced with a triangle which is some sideways momentum. So if I was trading these, I would probably be plotting here, looking for a potential trade or break above that level. And at the same time, I'd also be plotting this particular area here, such that if the market were to get closer to the lower trend line, and I'm talking about this area here, then it will represent a nice buying opportunity, evidence of further entries by buyers. So I would mostly consider this sideways momentum and then stay on until I have a clear signal for this particular trade. So that's it for today. Thank you very much, guys. Thank you for your time. I hope to see you on the next session. So sign of a more stronger dollar, traders pricing in on that. No, a weaker dollar. I think that's seeing evidence for so after the strong rally that happened last week, you can already see that this week has a largely been sideways. So look at the week. One market opens here, goes up, down, and then all the way up, down, and now forming some form of consolidation here. You can see there is some form of support this week on Monday, Tuesday, Wednesday, and now this is Thursday. So more or less of a sideways momentum, and with more tests towards the lower side, is indicative of a market that potentially breaks the lower trend line. So there is a good chance of seeing the dollar going this way compared to the potential for the dollar going this way. So potentially we can dollar for the rest of the trading day.